Alrighty, so today we're going to begin by first addressing a great comment from Julian right over here, and then answering a question from Sachin right down over here. And before we begin, I do want to take the time to thank all of you for the great feedback that I've been receiving underneath the most recent videos. You guys have no idea how motivating and encouraging it is to see that we've developed a community that's actually looking to learn as opposed to only looking for price calls like a lot of other communities out there. So guys, thank you so much. Keep the comments coming and keep the questions coming, because it does help further the discussion like we're going to be having today. So let's go ahead and start with Julian's great comment right over here, because it does allow us to expand far more on what we discussed in the previous video a couple of days ago. And for those of you who did miss the previous video, I really urge you guys to go ahead and watch it. You guys will learn a lot. We discussed a lot, right? These are all the charts that we did discuss, and to just give you guys a preview on how much we broke everything down, here are all my scribbles on those charts, right? So go ahead and check out the video. Posted it a couple of days ago. It will be highly beneficial for all of you guys who are looking to get a better understanding on how to position yourselves for the next bull market and the accumulation strategy that we are going to be employing over here at Mango. Okay, so going back to what we're discussing today, I want to start with Julian's comment right over here. And he references this on-chain metric that we were discussing in the previous video that I said, hey, this is aligning with our thesis. It's aligning with our thesis, but there's a caveat to this that I do want to expand on. Okay, so we'll be doing that today. We'll be expanding on that caveat. So let's start with Julian's comment. He says, thanks, Sean. Brilliant video. Really enjoyed that. Thank you, Julian. He says, as an aside, I think the usefulness of on-chain analysis in general should start improving further now that many more people are moving to self-custody instead of storing their Bitcoin on exchanges. That should, in theory, lead to sharper on-chain signals. Now, I completely agree with this, especially if we start getting more entity-adjusted on-chain data, right? And we are beginning to see this, but not in the way that I would like. And if you guys do remember, in the bull market too, the bull market all the way to 50K, 60K, all the on-chain analysts were getting a lot of attention because things were going their way. But I was really skeptical, right? If you guys were following Mango back then, even though I was really bullish and we were paying attention to that, I always said, guys, price will always be more important than on-chain data. And the reason I say that is because on-chain data, especially as it exists in its current form, makes certain assumptions about market participant behavior. Let me give you guys a quick example using this chart that we referenced in the previous video, right? The Bitcoin realized profit loss ratio. We pointed out that every one of these peaks over here, okay, 2012, 2015, 2019, the COVID dump has lined up with major market bottoms, right? Right over here, you guys can see the black line, guys, is Bitcoin's price, right? This lined up with Bitcoin's bottom zone right over there. This one over here lined up with Bitcoin's bottom at around, I believe this was around $200. Then right over here was the 3K bottom. Right over here was the COVID re-3K bottom. And now right over here, again, we're seeing a major spike in the Bitcoin realized profit loss ratio, and this could potentially line up with our thesis from the previous video where we are saying that we are neither in the inventory flush out zone or in the rising bull market, but we might be in the shakeout zone leading into the rising bull market, right? So we're looking for confirmation on that. But my caveat was that, hey guys, be careful over here, because we need to understand what we're really talking about over here in the realized profit and loss ratio, and how we could misconstrue this, or there could be misleading information in this data over here, because you really need to understand what this is actually calculating, because this could spike down further, and this current spike over here could be misleading or could be misconstrued, right? I'm not saying it is, but once you get a better understanding of how this profit and loss ratio is calculated, you will leave room for that possibility. And that in itself is risk mitigating, right? Because at the back of your mind, you'll be thinking, wait a minute, what about this scenario or that scenario, right? So let's go ahead and walk through a story right over here, guys. Okay, I'm going to walk you guys through a story that will give you guys a better understanding of how to think about on-chain data, especially this ratio right over here. Okay, Let's say Julian buys Bitcoin at $5,000. Okay, so he buys one Bitcoin for $5,000. He waits a couple of weeks and Bitcoin now moves all the way up to $10,000, right? So Bitcoin is sitting at $10,000. At this point, Julian is super happy and he wants to buy his daughter a brand new car. He goes up to Sean and says, hey Sean, I'm willing to give you one Bitcoin for that nifty sports car that you have. And Sean says, sure, my depreciating asset for your Bitcoin, hand it over, right? So Julian gives Sean the Bitcoin and now Sean has Bitcoin and it's sitting at $10,000. By the way, Julian would never ever do this. He loves his Bitcoin way too much to spend it on a car. But let's go ahead and discuss how the on-chain data is going to be looking at what just happened, okay? And we're going to discuss it right over here, okay? Right down here where we have some space. All right, let's draw a little box right there. Okay, and what we're going to do is we're going to go ahead and draw a representation of Bitcoin wallets, right? So here we have Julian's Bitcoin wallet and over here we have Sean's Bitcoin wallet. Okay, Julian initially bought Bitcoin and received it at $5,000, right? So initially it's sitting in his wallet and Bitcoin's price is sitting at $5,000. Now, finally, after a few weeks, Bitcoin goes all the way up to $10,000 and that's when Julian sends it over to Sean's wallet. Okay, this is the point at which the on-chain metric over here is going to say that, hey, Julian has spent his Bitcoin because it's gone from his wallet to a new wallet, to Sean's wallet, right? So what this on-chain metric will do, it's going to take the price at which point the Bitcoin was moved, which is $10,000, and subtract the price the last time it was moved, which was $5,000, right? Because remember, when Julian bought his Bitcoin, it was moved into his wallet and the price was $5,000. And the next time Julian spent his Bitcoin was when he gave it to Sean, right? So the way on-chain is going to look at this is that, hey, Julian has realized a profit of $5,000 because 10,000 minus 5,000 is 5,000, right? So Julian has a realized profit. Let's go ahead and write that down right over here in red. Julian has a realized profit of $5,000, which does make sense, right? This is completely correct because Julian bought for $5,000. When he sent it to Sean, he's essentially realizing a profit of $5,000 because Sean gave him a $10,000 car. Okay, cool. All well and good. So at this point, the on-chain data has actually recorded this appropriately because Julian did realize a profit of $5,000. But let's go back to our story, okay? And let's see how this unfolds. And for now, let's go ahead and clear all of this because we don't need these drawings right over here. I'm just going to make some more space first. All right, cool. Now let's recap our story. Remember, Julian bought Bitcoin at $5,000. He spent it at $10,000. He gave it to Sean. Now that Bitcoin is sitting in Sean's wallet, right? So the on-chain metric has now realized a $5,000 profit under Julian. Okay, cool, all well and good. Now Bitcoin drops down to $8,000. Okay, $8,000. And Sean says, whoa, a 20% discount on Bitcoin? I want to buy some more Bitcoin. But the problem is Sean does not have any fiat readily available on the exchange to take advantage of that $8,000 price, right? He has to first go to his bank, send over the money. By the time it reaches the exchange, Bitcoin may have bounced all the way back up to $10,000, even higher. So what does Sean do? He decides to send over his Bitcoin to an exchange that will allow him to use his Bitcoin as collateral to buy more Bitcoin, right? So for example, what I would do is I'd send my $8,000 worth of Bitcoin to buy $2,000 worth of more Bitcoin, okay? In the meantime, I'm waiting for my funds from my bank account to arrive. And I can wait very patiently, very stress-free, very mango on this position while my funds arrive. I can even tolerate several delays. Why? Because I have only a 0.25x leverage. I've done this in a very safe way. I've not sold Bitcoin. I've in fact bought more Bitcoin, right? Now I have a total of $10,000 worth of exposure. But how is the on-chain metric going to read this? Because remember, according to the on-chain metric, Sean has now sent his Bitcoin from his wallet to a new wallet, Kraken's wallet, right? At a price of $8,000. So according to the on-chain metric, Sean has realized a loss of $2,000. Because remember, all the on-chain metric cares about is whether the coin has moved or not. It doesn't know what I've actually done with the coin. I could have sold it on the exchange, or I could have used it to buy more Bitcoin while I wait for my funds to arrive from my bank account, right? It has no idea why I have actually moved the funds. It just assumes that, hey, if you've moved the funds, you have either realized a loss or you have realized a profit, right? So, for example, Julian moved his funds to me, right? And he did realize a profit. But what if he just simply moved it from one of his accounts to another account, right? What if he moved it to another wallet of his? What if he moved it from a cold wallet to a hot wallet? Well, that would have also counted as a profit, but he wasn't really realizing a profit, correct? Now, similarly, guys, this spike over here, I want you guys to draw your attention back to this spike, okay? This has happened at a time where we had a massive counterparty risk episode, right? An exchange went down, one of the top exchanges in the space. Everyone is spooked out, and a lot of people sent funds from whatever exchange they were in out into their hardware wallets, right? So in this case, even though they have not realized a loss, right, the on-chain metric would record them as realizing a loss because they have spent their Bitcoin according to the on-chain metric, right? Because as long as they've moved it, even if it's from their exchange wallet to their personal hardware wallet, it's going to be recorded as a realized loss. In fact, there are likely a lot of people like myself who first send funds into their hot wallet, right, guys? A hot wallet, and then sent it into their hardware wallet. So how's the on-chain metric going to record this? Well, there's going to be a realized loss over here, right? Because this movement, and then price likely went down even further in that period because price was moving down so fast, and then another realized loss between the time where we sent it from our hot wallet to our hardware wallet. Now, guys, all of this is not to say that on-chain data is useless. That's not what I'm saying over here. What I'm trying to say is understand what it's really telling you. Try to think of scenarios and edge cases that could lead you to misconstrue the data. For example, right over here on this most recent spike of the realized profit loss ratio, I would personally take this with a grain of salt and wait for a rise of the realized profit loss ratio before saying, hey, you know what? Everyone has already realized their losses. Because this spike over here, guys, could just mean that people have moved their funds from exchanges into their personal wallets, right? And the spike is going to record that as a realized loss when it's not really, right? We don't know that for sure yet, right? Let's wait for some time. Similarly, in a bull market, right, when you see a lot of on-chain data analysts say, hey, people are moving their funds out of the exchange. Hey, people are moving their funds out of the exchange. Well, that could simply be because now we have all these financial products available, guys, futures, options, CoinM. We have all these products available that allow us to defer counterparty risk, right? I've been talking about this for a very long time, for years now. I've said, do not keep your funds on the exchange because you can use leverage in a safe way, kind of like how I showed you guys over here, to take on your position sizes, and then you can even settle it with real fiat, right? So if you want to buy Bitcoin during a rising bull market, you can use a small portion of your Bitcoin to take leverage as the market is rising, and then send fiat in slowly and surely to settle your positions and then send it back to your hardware wallet, right? We talk about all of this in the C program, how to risk manage, how to defer counterparty risk, etc., while also taking advantage of the rising markets and the bear markets as well. So again, guys, all I'm trying to say is on-chain data, very useful, yes, but always keep your eyes open for how it also may be misleading most other market participants. All right, next question. Such asks, I'm trying to understand who controls the stock market. That is, let's say Amazon stocks. Does Amazon control their stocks, or investors like banks/hedge funds control the stocks? Now, this is a great question because a lot of people either take these things for granted and they think that, hey, I don't need to understand any of this, or they want to understand and they're too shy to ask. So I'm glad you asked this question. And those of you who have similar questions, I encourage you guys to ask away. All right, so The stock market. What exactly is the stock market? The stock market is simply a marketplace. Think of something like eBay or Amazon, where buyers and sellers meet at a marketplace to sell goods, right? Well, a stock market is where buyers and sellers meet at a marketplace to buy shares of a company, right? So when a company initially goes from private, right, to public, they offer an IPO, right? An IPO essentially stands for initial public offering, where they list their shares on a public stock market for people to come and buy ownership of the company. Now, the key word for you guys to focus in IPO is public, right? Initial public offering. It's offered to the public. So anyone in the country / the world can participate in buying shares of the company, right? And they're all listed on the stock market. You can actually go and get a breakdown of whatever company you want to look at and get a breakdown of the top 10 owners of so-and-so company. Right over here, I have a breakdown of Amazon, since you mentioned Amazon. I think I pulled this down from NASDAQ, right? But you can get this information from various websites. So just simply do a quick Google and you'll be able to find a breakdown of the owners of a particular company. Here you can see that Vanguard is the top owner. And Vanguard, by the way, is an ETF, right? So they do buys and sells on behalf of the general public. You are likely going to find Vanguard on top of every company, most big companies at the very least, as the major number one stockholder, right? So yeah, to answer your question, does Amazon have control of all their stocks? No, they don't, right? It's owned by a variety of people, and you can see the breakdown over here. So yeah, investors, banks, hedge funds, you can actually see some of them right over here on the list, right? Fidelity Management, BlackRock, right over here. So yeah, once a company is offered publicly on a stock market, the company does not control the stocks anymore, right? If the company wants to control the stocks, it could do so by taking the company private again, right? You could go from private to public and go back to private. And a good example of that is what Elon did with Twitter, right? Twitter was initially private, they went public, and then Elon took it back to private. Okay, so next part of your question, and this is the fun bit of your question. I really like this question. Also, Sachin says, I was trying to revisit the 2008 recession, and I'm glad you're going back and looking at the charts, man. That's how I got really good at not only TA, but controlling my emotions through these kind of episodes, right? I actually went and emotionally traded. When I say emotionally traded, I tried to sit through every one of these candles of the entire Bitcoin rally from start to end, as well as the stock market, right? So yeah, we can, I'm glad you're doing that. So you say, also, I was trying to revisit the 2008 recession on how it could have been identified purely on TA basis. I was watching The Big Short recently and I got curious, but I couldn't figure it out as I'm not so good in macroeconomics, but learning as much as I can from your videos. Okay, so Michael Burry, the guy who is famous for putting on The Big Short during the 2008 financial crisis, he did not use pure TA, right? He did a fundamental deep dive. And by the way, guys, I recommend reading the book, right? The Big Short, as opposed to the movie. Yeah, the movie is great. Watch the movie, great movie, but the book is going to give you guys great insight. So yeah, Burry, what he did was he did a fundamental deep dive by analyzing all of the CDOs, the CMOs. So CDOs are collateralized debt obligations and the CMOs are collateralized mortgage obligations. And he assessed them in the mortgage-backed security market, and he basically came to the conclusion that most of the mortgages that were wrapped in these financial instruments were all basically garbage, right? Because after looking at all of the debtors within these obligations, he realized that none of them were going to meet their obligations, right? So essentially, all of these were going to go to zero. So he did a deep dive because he had a team of analysts, etc. That's one of the reasons why I moved away from fundamental analysis and moved into technical analysis, because you need a massive team, a lot of time on top of having a team to be able to successfully pull off fundamental analysis, right? There's a lot of research and manpower required. However, with technical analysis, you can simply identify a booming market and play the trend, right? Which is where your advanced trend analysis module in the C program is going to be extremely beneficial for you, Sachin. I recommend you guys, like every time people ask me, what's your favorite module? For me, it's always the advanced trend analysis module, because it literally allows you to not only trade the lower time frames like a professional trader, but you will also be able to invest in trending markets, right? Right over here, you guys can see how the stock market was trending, right? It was trending really well. But look at what I did over here. That was your big warning sign. And how familiar is this to you guys? In fact, let me just go ahead and quickly erase all of this, and let me zoom in to the chart for you. Okay. All right, there we go. And again, like I was saying, how familiar is this? Well, at first we had a nice little upthrust. We had a little high over here, a higher low, higher high, higher low still, right? And then another higher high. And then what happened, guys? Well, we put in a lower low, right? Failure by the bulls to maintain that structure of higher highs and higher lows. Instead, we put in a lower low right over here, continued with a lower high, essentially beginning your downtrend after that, right? And this, guys, is your M pattern, right? We put in a perfect M, and this looks so similar to Bitcoin. Now, let's go ahead and erase all of this, okay? You didn't need to get out right over here on the top. You could have simply gotten out over here. In fact, if you waited for the breakdown, and yes, it took a few months, you got a perfect retest of the neckline right over there, and then continuation. This, from this drop to this drop, I believe was a good 40%, right? We'll go to the charts really soon, but I believe this was a good 40%, and that is huge. That is huge in the stock market. To put things into perspective, I believe the current drawdown in the stock market is only around 15% to 20%. This is, of course, after the rally, right? And people are still losing their shit over this current drawdown. This drawdown, this 40% drawdown, you could have completely avoided by just using simple advanced trend analysis from the concepts that you already have access to. Just rewatch them. They need to get embedded into your head, man. And once you do, right, you're not gonna put yourself in any trouble, regardless of any fundamental knowledge that you are lacking. Alrighty, and here we are on the charts, and we're looking at SPY at the moment, the 2008 financial crisis region where we broke down. We're looking at the monthly time frame, and you guys can see that this drawdown. Okay, so first, again, let's rehash what we were talking about. M-like formation. Here's our neckline that I have marked out as a zone. We retested that perfectly, right? This is simple TA. You did not need to know what was going on during the financial crisis, etc., to know that, hey, this is not looking good. We have broken a massive structure, right? Your advanced trend analysis module, guys, very, very simple. You do not want to be going leverage long. Like if you had a leverage long position, right? Let's say you longed here, right? Great. Good call. Market bounce and test the neckline. Do we break and close above the neckline? Just wait for the monthly close. How often have I told you guys, wait for the monthly close and you will know all, right? Well, the monthly close and we did not reclaim that neckline. That's enough for you to say, F it, I'm taking my profits and I'm getting out, right? Or let's say you did not long here. Let's say you were riding this entire trend, right? This entire bull market. You sat through all of these months. You're working your full-time job. You're enjoying these profits. And then the market breaks down. You're still sitting pretty well in profits, right? So from around here to around here, you're still up a good 70%, okay? Everything's good. Now you're waiting patiently, right? You're using the mango way. You're being stress-free. You're waiting patiently for the market to give you the right signs. Market starts bouncing. You're feeling really good. But now you're using a simple trend analysis. You're like, wait a minute. We haven't reclaimed the zone. We rejected it. That's it. The monthly closed badly. I'm getting out of my stocks. I'm at least selling 50%, 75%, whatever your risk management is. You decide to get out of it, okay? What happens after? Boom. Look at that. Look at that. And guess what that drawdown, guys, was? Not 40%. It was actually 52%. That is huge. That is huge in stock market terms, right? So you would have been sitting underneath where you entered. So you would have turned what was a 70% profit now into, well, 17% loss, which would have been painful to endure after going through. It literally undid 8 years of action, guys. 8 years of action. That is ridiculous. 2,219 days worth of price action all evaporated in these few months, right? But your trend analysis, without you knowing anything what Burry knew, right? All that analysis that Michael Burry did, you could have just seen on the charts. And now I'm going to show you guys how Bitcoin also gave us the same signs. If you guys have been following Mango for even a year, you guys know what we were looking at, right? We were like, hey, Bitcoin is losing key levels that we don't like, right? A very, very similar structure over here. By the way, looking at Bitcoin now, right? The chart over here is Bitcoin. We're looking at the monthly time frame again, right? SPY, we're looking at the monthly. Bitcoin, we're looking at the monthly. You don't need to get caught up in the lower time frames, guys. The monthly will tell you a lot, okay? Now, look at Bitcoin. What Bitcoin do? Very, very similar, guys. Very, very similar structure. We put in a nice little up thrust, right? Put in a high, higher low, higher high. Again, very similar, very similar. But then what happened? What happened? We failed to maintain that higher low, right? As soon as we took out this low over here, guys, right? That M-like formation was broken, right? And we had our downtrend begin. And if you guys do remember, like even if you're bad at analyzing your trend analysis, there were two things that we were looking at, and one of the things was the Mango dynamic, right? And look at that, okay? Look at that. Look at how we close underneath. Right over here, I remember a few of you guys asking me, hey Sean, we close underneath the Mango dynamic, but we closed ever so slightly underneath. Does it count? Yes, it counts, period. You do not negotiate with your risk management. As soon as something is set in stone for you that, hey, I'm going to be getting out and at so-and-so levels, or I'm not going to be taking leverage trades anymore at so-and-so levels, well, you stick to those rules. That's what risk management is all about. And right over here, we close underneath the dynamic, gave us a perfect retest, right? So you had a nice month. For how fast crypto moves, guys, crypto is also really generous. And look at that. You had enough time to get out right over here. We poked our head up, right, giving us a nice exit out of all our trades, and Bitcoin just kept going down after that, right? If you guys do remember, over here we were bullish, right? Do you guys remember this month where everyone gave me shit for being bullish? Why did I get bullish? Because of this monthly candle. The monthly candle dipped underneath and closed high. And then once we got this candle after that, where it was a green candle with tempo turning white, right? This white candle, guys, represents tempo. You guys can see tempo is off at the moment for the current Bitcoin candle. Well, over here, we turned white, right? And we held the dynamic as well. I turned bullish, right? And boom, we had our move towards the upside. Now, we were looking for Bitcoin to hold this level over here. Of course, you guys all know I am bullish on Bitcoin long term. I have my biases on Bitcoin, but I don't let my biases overpower my TA. My TA is first at all times, And we close under the dynamic. I'm like, that's it, man. This counts, period. So you guys could have been using the dynamic, and the dynamic is designed for being a lot more tight with your trades. Or if you don't have the dynamic, well, you could have still simply drawn in a horizontal over there, right? Marked in your low right over here, right? And said, okay, we lose this horizontal, that's it for me, right? And if we lose this low as well, that's also it for me. If we lose both, that's definitely it for me. And we did that. We did that on this month over here. That's the month of May. We closed underneath the horizontal and we took out the low in the same month. That was it. That was the beginning, the official beginning of the bear market structure initiating its downtrend. Alrighty, so I'm going to wrap it up over here. As you guys can see, Bitcoin and SPY from 2008 looking frighteningly similar, at least in regards to market structure, right? We had a M-like formation where Bitcoin poked its head up ever so slightly compared to its previous monthly high closes. And hey, SPY did the same thing, right? Stuck its head out ever so slightly. And that initiated one of the worst markets in the history of SPY. Now, again, I hope you guys enjoyed this video. Please let me know if you guys are enjoying this kind of content. Please keep the questions coming, and your comments have been extremely motivating in encouraging me to keep these kind of videos on a regular basis. So until the next video, I'll see you guys in the Mango Discord. Ciao.